Ladies and gentlemen, I'm not going to waste too much time by introducing all of the panelists here because they're in extremely capable hands of Ajayi on my right, who's from London Stock Exchange. And I also wanted to just take one moment to say thank you to Abby for hosting us at the London Stock Exchange this morning for the market opening ceremony in celebration of the Africa Debate 10th anniversary. So a huge thank you to Abby. Over to Abby. The panel is yours.
Thank you, everyone. Good afternoon. Thank you, Karen. I think I'd say it's my distinct pleasure to moderate this panel today. My name is Ajayi, and as Karen said, I'm responsible for primary markets, Middle East and Africa. So in very sort of simple terms, I would say my unique responsibility is connecting capital, communities, and conversations. And I know someone said earlier, two people actually, to quote, Zainab said, capital is a coward. I dare say capital is a coward and it has only one religion, returns. Mm-hmm. On that note, we're just going to dive right in. Runa, we're having you double-header. I mean, you said earlier about your investment in Africa. I mean, you've been investing for over sort of 20 plus years, very successfully at that. What would you say perhaps are the key drivers or constraints that impact on your decision in terms of investing? And I'm giving you two questions in one to help us set the scene. And what are the lessons that you've learned from successful case studies in terms of private capital deployment?
Absolutely. Why Africa? It's the first question you asked. So I would say there is no way for major investors not to invest in Africa. And some of these data have been mentioned in past panels. By 2050, a quarter of the world's population will be in Africa. By the next turn of the century, 40% of the world's population. 800 million new entrants to jobs are coming in Africa. By 2050, by 2035, Africa will have a bigger workforce than China. So the trends that we saw in Asia from the 1960s onwards are absolutely happening in Africa. Population growth, urbanization next, which is by 2050, 18 out of the 30 biggest cities in the world will be in Africa. When you put population growth together with urbanization, there is tremendous growth in consumption. So as a business, as an investor, and we invest in companies that benefit from the African consumer. We provide goods and services, our companies, to the African consumer. How can you stay away from those trends? Then when you add to that, over the next few years, Africa is just a little bit below Asia in growth. By 2028, that flips, and Africa becomes the fastest growing continent. This is according to the World Bank estimates. Combine growth with consumption, you have more consumption. And we talked in the last panel about digitalization. It is an extraordinary way to reach the African consumer. Your revenue growth goes up much faster, you have efficiency, and you have now, you're selling to the mass market, no longer the middle class, but the mass market. All of those are reasons to really, for an investor to invest in the right companies, whether they're banks, insurance, FMCG companies, pharmaceutical companies, education. There is so much out there. The constraints all have to do with, frankly, as an investor who's raised 3.2 billion to invest in Africa, the constraints still are lack of capital. And that is capital growing out of Africa and capital coming in from abroad because of all of the reasons I'm sure we'll talk about, perception, all sorts of things like that. By getting returns, you're absolutely right, we draw in more capital. So the real main constraint is that.
Idris, is he still in the room? Runa's got $3.2 billion. So, thank you, Runa. I think sort of when I put all of this into context, and it talks about there is a need for key market infrastructure to be able to crowd in this private capital. And to crowd it in. I think, Cheryl, I'll come to you here. How important is local capital markets in development, in helping to attract private capital to Africa?
Thank you, Abby. And certainly Runa's highlighted the opportunities that are seen across Africa, and indeed being, working for a Pan-African bank where we've been on the continent for close to 120 years, we certainly believe that there are substantial opportunities. As Runa touched on, there are also a number of challenges, and I think they've been covered well today, be it currency depreciation, liquidity, availability of liquidity, convertibility, opportunity for foreign exchange. There are a number of issues, but there are also key opportunities that we do see, and there are key challenges that we can put forward to say this is how we're going to address it. And I think the point's been made around the fact that capital is needed on the continent, investment is needed on the continent. There has been significant investment, but in global terms, Africa still gets a very small proportion. So what are we going to do about investing in and attracting the capital? And I think one of the first points that can be made is that capital really has to be generated and attracted not only from the global markets, but also from local markets as well. So how do you develop local markets such that you're getting local investors to invest in it? There are a couple of actions that are being taken at the moment in terms of looking at attracting capital markets. And I think a few that I'd like to highlight: investment policies. What investment policies are governments embarking on, be them international policies or domestic policies, such that they can look at reform, be it regulatory reform, reform around incentivizing areas, special economic unit areas, various incentives around infrastructural development in the renewable space. Global partnerships, that's been touched on today, really key in terms of looking at how global partners and local partners can come together to look at that development within the market. Trade agreements, regional cooperation. I don't think that Africa itself spends enough time on developing itself within. Idris said that himself. How do African communities come together and look at that intra-Africa trade, that intra-Africa development? I think too often we look to foreign investment as opposed to saying, how do we do it locally and from an intra perspective? And just the couple of last points I'd like to make around that local capital market development. Governance is key. And Runa, I think you mentioned governance, and Cheryl Blair mentioned governance earlier. Governance is key. Openness, transparency, and accessibility. I think that those three things are really key in order to develop the financial market structure that we need and the infrastructural development that we need to look at various financing opportunities across blended finance, commercial finance, development finance, all coming together. And then I think, when we look at just an example around looking at some of the capital markets development that we are seeing, across the stock exchanges across Africa, they really are a mosaic. You see the biggest being the Johannesburg Stock Exchange, and then a number of others that have been relatively small but are developing at pace. Rwanda as an example, Ghana as an example. And they're ensuring that they develop their own frameworks and that they access capital in the right way. Rwanda's accessed the IMF Resilient and Sustainability Fund, and that's around accessing long-term capital via providing the reform that is required and the regulatory reform and the accessibility reform and governance around that to attract that type of capital. So a few examples just of the thoughts around how we can look to attract private capital both globally and within our own markets.
Thank you, Cheryl. I think I'm going to come back to the point around the problem of small. I call it the problem of small on the continent in terms of investing, and Runa will help us there. But just a good time to bring Simon in, given one is, I'll call you the money man. You're moving, I'm sort of working for Crown Agents Bank. The question around banking infrastructure and the ecosystem, which Cheryl was speaking to, how much of that issue creates a limiting challenge for capital flows in the work that you do?
Yeah, I mean, certainly as the transactional banker on the panel, I'm very much going to focus around the service really in correspondent banking that underpins a lot of the investment and movement of funds into and out of regions such as Africa. It's the one service where one bank typically provides a service to another. It's absolutely essential for global investment, but also trade flows, and that's because de-risking across emerging markets has been a massive factor in that. Networks, global networks of clearing relationships, correspondent banks are shrinking, and that really is despite the growing need for funds to be moving into regions such as Africa. I think even with the technological advancements that we've had over the last 10 or 15 years, there's still a heavy reliance on the underlying correspondent banking networks that exist out of the major economies, US, UK, Europe, etc. I think it's stating the obvious that de-risking has had a significant, or can have and has had a significant negative impact and consequences on the banking sector. But really, as FIs in emerging market economies struggle to access direct clearing relationships, but also countries in some cases face the real prospect and potential of being exited in its entirety. There's a number of countries, not only across Africa, but further afield, which are at real risk of having no direct clearing relationships whatsoever for dollars, for example. Cross-border trade, therefore, becomes very, very difficult and a challenge, which and basic services, which many of us consider a right, international transactions, payments, cash management, trade finance, all of a sudden become a greater challenge for a lot of these FIs to access.
So I counted. You said the risk 5 times. Dr. Federico, we started a conversation last night, and I think it's a good time to pick up that conversation, particularly around, because then everyone talks about there's a continued perception of risk when Africa is concerned. And you just say, like, IFC is a tool just put in place to help to mobilize finance into emerging markets. How much of the work you're doing is supposed to help to, you're working in the upstream, to crowd in and help to mitigate this risk, particularly since this is the money panel as far as I'm concerned. What work is the IFC doing, and can you tell us a little bit more about how you're helping to solve this big challenge?
Look, you want me to write a book in 3 minutes. Let's just talk about the 2 core issues, financial risk and non-financial risk. As financial risk is concerned, IFC has assembled a practice of global investors with local knowledge. We have 100 offices. We interact with the banking community, with the sponsors community around a variety of projects to structure them in a financially sound way. And the data we're pulling out from our experience show that our suffering, what we call in credit provisions, losses, is significantly lower than one would expect, say from the bond markets and from the common notion of emerging in Africa. As it comes to non-financial risk, we made a major effort on the accountability front to set what we call performance standards, which are a risk management framework to do the right thing in social and the right thing in environment. And most banks investing in emerging markets, to some extent, follow and embrace these standards.
I think it's very tricky for investors looking to invest in Africa not to talk about currency risk and volatility in markets. Runa, I'm going to turn to you. 25 years investing dollars into local markets. Yeah. How have you been dealing with this sort of challenges? I mean, it'd be good to hear some of the solutions or the problems you faced.
Absolutely. So the 2 biggest questions we get from our investors are exits and FX. So you've hit both of them. Let me start with exits. So because we invest in larger companies, there is a point that, that we have to see how many people can buy this company, or we have to list the company. And if the stock exchanges are not open at that point, or the multiples valuations are not high enough, then you're kind of out of luck. However, having said that, it truly is, if you build it, they will come. I have seen over the last 25 years, if you have a good asset, so a good management team with a large company which is growing and is also profitable, and the EBITDA keeps going up, trust me, it will be sold. It will be sold. But there's a couple of trends that I want to point out that are going to make exits easier in Africa. And I put exits in the framework of, according to Bain Capital Research, exits are down 65% globally. There are today 28,000 unsold private equity companies in the world. It was about 8,000 10 years ago. So there's a lot of companies that need to be sold all over the world. It's not unique in Africa. If anything, exits are down about 22%, not 65% in Africa. But there's a couple of trends that really help. One is the area you're involved in. The stock exchanges are getting more and more liquid. We're looking to exit through IPOs on an African stock exchange, 2 this year, 1 next year. I'm hoping that there's also dual listings possible in Johannesburg, here in London, and now the Middle East, you know, ADX and the Saudi exchange. So that's one. The second thing is there's a trend of a lot of interest coming out of the Middle East and Africa. So we realized that when we had 2 exit processes, and both our companies were bought by large sovereigns in the Middle East. They were the highest bidders. And so when we look at that, a lot of our companies are actually expanding to the Middle East. There's a connection there, and there is liquidity out there like there is here. So I'm actually not pessimistic about exits, but let's talk about FX. So FX has been plaguing our world forever. In 2016, during the downturn in the commodity cycle, some countries had devaluations of up to 60%. Today, the last a year or two, with the energy, prices going up, the war in the Ukraine, where a lot of wheat was coming from that region to North Africa and East Africa, the inflation meant a lot of devaluations, Egypt and Nigeria in particular. However, Egypt now has a $60 billion stabilization package. Nigeria has done a lot of things right in the last year. We expect some stability there. Having said that, we don't have long-term hedging products. And when we have short-term hedging in certain countries, it's very expensive, or we have open hedges. So the only thing we can do about FX is invest in the best companies that outgrow the devaluation. Egypt, 36% devaluation. Our companies in dollars are still growing. The valuations are growing. The only way you can do that is to realize there are extraordinary companies in Africa. Given the demand for those goods and services, they can outgrow. Or you invest, so those are defensive companies, or you invest in a digitized company, which if you pick the right company, even profitable ones, not even startups, they can grow astronomically, outgrowing FX. Or you invest in a company that has dollar revenues. Those three things in our world, in our companies, have really helped us. So there's still growth, and there will be exits.
Oh, so thank you, Runa. So the point I was raising earlier about the problem of small, you only invest in big companies. But however, I want to point this is a statistic actually. SMEs account for more than 45% of the GDP of most African countries. And I know, maybe Cheryl, you tell me this. It's very important that we actually continue to provide financing for those SMEs, because then there's a trickle-down effect, because those small companies also finance families, and in turn, that helps to grow the economy. What does Absa do in this regard, particularly with respect to helping to drive financial inclusion as well as SME financing, again, addressing the problem of small?
Thank you, Abby. Development of SMEs across Africa is really critical around the longevity of the continent. As I said, that access to local capital and that access and the development of local capital markets will really be able to grow significantly when you see the development of SMEs. So it's part of Absa's DNA to understand how we can provide financing to SMEs and across the market in various mechanisms. We look to provide a number of financing, so we would look at a number of themes underpin that as well. Financial inclusion, as you rightly say. Obviously, with the development and exponential growth around mobile, that's helped to a large extent around how mobile is not using the traditional bank account as mentioned earlier, but mobile. So financial inclusion is really important. Development of women is also extremely important, again touched on earlier, and those are two things that Absa really looks to support. So underpinning that is what do we look at in terms of the role that we play in helping to develop SMEs and developing SMEs not only in the market but also to enhance intra-regional trade, which is what I spoke about, touched on earlier. We are involved in a range of SME type financing. We work with a lot of DFIs as an example. We've recently concluded a transaction that was multi-million-dollar with the IFC, where we financed a green coffee merchant in East Africa. And that financing will provide, it's clearly blended financing, and it provides the ability for a number of smallholder farmers. And over and above that, obviously accessing the entire value chain that supports that. And I think that's really important is when you look at an SME and funding of a SME or a group of SMEs, be it smallholder farmers, be it women, be it types of communities, you actually can access and give positive impact to the whole value chain. So I think it's really understanding the value chain as well that unpacks that. So, when you look at the agricultural value chain, it doesn't only start at the smallholder farmer that may require funding, but it goes all the way through to the larger corporates and the larger businesses that then are distributing an already processed and produced good. And I think at each stopping point, there's opportunity there. And we certainly look at the different pieces of the value chain to enhance that development and financing ability for SMEs across.
Thank you. Simon, before I come to you, Runa, you wanted to make a contribution.
I just wanted to very quick point, which is that touching on the SMEs or mesofinance and also the unbanked in Africa is possible with large companies. So first of all, we're now into venture capital because in my 25 years of investing, the biggest thing I've seen is digitalization. It is going to change Africa. So we have a company called Kofina that lends to SMEs. We're digitizing that, which will increase astronomically how many people they can get to. They have a program called FinL, which only lends to women entrepreneurs. So there's a way for large companies to lend there, but also you can do embedded finance. You can repurpose assets. And so all of that are ways today that we can get to SMEs and financing there that we couldn't do 7 years ago.
Excellent. Talking about access, thank you, Runa. Simon, how important, when we're talking about access, we're talking about FX and channeling investments onto the continent. How important is the FX market for attracting capital into Africa?
Yeah, I mean, I was going to say, functional and effective FX markets sort of require a very sustainable correspondent network as well, right? So without the ability to make international payments, without the existence of the local commercial banks having a robust and sustainable correspondent network, those funds just don't flow. So look, commercial banks are integral to that, and I think the bankers in the room will realise that is very much driven by compliance these days, in terms of the correspondent relationships that everyone maintains. Those commercial banks have to have sort of, trusted, transparent partnerships with their counterparties there. The AML, CFT, anti-financial crime measures against which they are, quite frankly, ranked by international clearers are very much what they need to need to impose and implement at their banks. Regulators need to be sort of lining local regulations with international standards. The FATF measures, etc., come into mind. But equally as important from a correspondent perspective, and us as a provider of correspondent services to banks in emerging markets, it's equally important from our compliance colleagues' side that they see those rules and those robust measures being evidenced that they are actually implemented on a routine basis by the commercial banks on the ground. And quite honestly, a stable pool of correspondents just naturally correlates to a greater panel of FX counterparties and access to a deeper pool of liquidity. So from servicing, I'm very much looking outward at this. I know everyone else is looking very much inward from an investment part, but certainly in terms of the infrastructure that exists from a local commercial bank perspective, that's really some of the things that I need to take into consideration and really sort of harness.
Thank you. And Federico, the IFC is very important in all of this conversation. Can you tell us about the work, and Cheryl mentioned earlier about the work which Absa did with IFC. Can you tell us about the collaborative effort between the IFC and mostly banks, as well as financing parties on the continent? Can you tell us what you're doing in helping to, one, alleviate some of these challenges and helping to crowd in the investment as very much needed to drive growth and development on the continent?
At its root, and it's in our Articles of Agreement, the IFC has a mission to mobilize capital. We were not designed to go alone. We were designed to co-opt others with us. And we typically, for every dollar we invest, there is at least another dollar that comes alongside. And the parties we have been historically closest to are like-minded development institutions. So either other multilateral development banks, regional development banks, or development finance institutions from our shareholder states. And this works because we have similar mandates, similar risk appetites, and also similar accountabilities. We are now looking to a broader investor base, and that scaling up is probably going to be our next challenge. What we decided to do together with the 2025 most usual partners is to put our data together, our performance data together. This is called the Global Emerging Market Database Consortium, GEMS. And what GEMS tries to do is something that, to the best of my knowledge, is not even done in advanced economies, which is to pool loan-level data from a variety of institutions to look at the performance of these loans level data, both in terms of default frequencies and recovery rates, and make those data available to the public. What's coming out is that our credit experience is extremely robust. I alluded to it before. Let's not forget, IFC only does private sector. And lending to the private sector properly structured and with proper accountability results into good credit. And we're increasingly making this data available, and a story is emerging. Something that we're studying, and it's a bit of a preliminary finding, but Africa is actually one of the continents where we have some of the better credit performance. We're still trying to understand exactly why. It may be because we work often with foreign companies, so the ultimate default is not determined by the geography, but the nature of the counterparts, but we have an extremely positive credit performance in Africa.
Can you say that again? Did you say Africa is one of the continents with the better credit performance? Can you say it again so that say it so that the people at the back can hear you?
According to the GEMS database, yes, it is.
Speaking of, thank you, Federico. Speaking of sort of databases and things, I'm just going to pose one question to the audience. I mean, how much of an impact does the absence of a working, strong capital formation base in countries affects the financial systems in your view? I mean, I can start with Cheryl.
Thanks. So Absa has the Absa Financial Markets Index that we work with on FIF, and it's an independent index that looks at how it reduces trade, how it reduces barriers for investment and increases growth for countries. There's 28 countries, and I think when you look at the analysis, it's had its 7th edition, the analysis that's coming out, the importance of market depth, FX availability, that structure, legal and other governance, those are all coming up as key critical in terms of attracting investment. And indeed, we're seeing a lot of progress made. In the last review, I think 15 out of the 28 countries actually improved on the index. So certainly, it's demonstrating that Africa is open for investment. There are challenges, but in terms of those fundamental structural reforms that are taking place, it's happening, the progress is being made, and certainly openness, accessibility, and transparency are key, and they are starting to come more and more to the fore, which is definitely an attraction for investors.
And Runa?
Well, I will just add one more thing. I very much agree with you, Cheryl, which is the development of the African pension funds and the insurance industry that I've seen, which really is any part of the world, that is where a core of where the wealth lies and the investment capability. So a few years ago, most of the African countries did not allow pension funds to invest in anything but government securities, and then it was the stock markets. And then just a few years ago, they allowed investment in private capital, whether it's private equity or private debt. That has changed a lot of things in Africa. I've seen the skill sets among pension fund trustees, the managers, et cetera, grow in this area, which is a specialized area. And the amount of capital that's now available in South Africa, in Botswana, Namibia, but then Nigeria, and very much starting in East Africa, out of the pension fund industry, is now growing quite a lot. Most parts of the world, international capital wants to invest with local capital. This growth is significant. And as we see that into the future, I think Africa will have some of the local capital that's required. Remember also, stock markets in Africa are dependent on that. You need institutions to support every offering. Yep. So that growth, also in Morocco, see it in Egypt, all over Africa, is very important.
Thank you. I mean, I'm just looking at the time now. I think I've heard from panelists that there is appetite, risk mitigating tools being put in place, and there is a support mechanism. But I think before we leave, I just wanted to ask very quickly, a silver bullet remark. Just one silver bullet, I call it silver bullet remark. So if there is, in your view, the biggest constraint to capital flows on the continent, what is your simple solution to it?
Myself going first, okay. So, I mean, look, I'm going to be consistent in sticking with the correspondent banking piece, right? But having that ability for local banks to be able to gain access to direct clearing relationships or correspondent banks in US, UK, Europe is key.
Federico?
Look, this is going to be a bit technical, but to me is the unbundling of the funding and the credit risk-taking. The optimal deal is one in which the funding is done by a local bank and the credit risk is taken by an international investors. That's a win-win.
Cheryl?
I've said it, I'll say it again. Openness, accessibility, transparency of the markets, and the structures that are within that certainly go a long way in attracting investors.
Runa?
Macroeconomic stabilization And you asked for a country, and I'm a big, big fan of Nigeria. And I think some of the things that have been done by the government over the last few months are very good. Now, the private sector needs to create confidence. If Nigeria gets going, biggest economy in Africa, it will be a silver bullet.
Well, thank you so much. I think on the audience, you heard it from the money panel. I dare say Africa remains prominent on the global economic and prosperity agenda. Thank you very much. Really appreciate it.